All right, everyone. Good morning and welcome to the Friday edition of the Ninjacators Morning Bell with me, Richard Gay. Right, guys, before we dive into the markets today, just a quick note: there is a bank holiday in the US, although the stock markets are open, in celebration of, or observance of, should I say, Veterans Day. Then the markets went bananas yesterday, and this after the core CPI figures came in 0.3% less than October's numbers. Quite a significant surprise, and we've seen very strong moves higher in the ES and the NQ. I'm sure the Dow as well, although we follow the ES and the NQ, both rising by more than 5%. So let's just put this in perspective. Obviously, the market's been, a lot of fears in the market with inflation, uncertainty, etc., etc. And this number surprised, and the markets reacted accordingly. Just got to remember that an inflation figure of 7.7% is still pretty bad. That being said, in the bigger picture, let's just jump into ES, show you what I'm talking about here. I'm still bearish. That being said, I'm not going to be completely hard-assed about it, if I can say that. I can always, as a trader, you need to start changing your mind sometime if, things do not work the way you think they should work, right? Mark's obviously always right, and at least we've got, for a significant period of time since we started the morning bell, been able to forecast lower prices. Now, this bounce higher here could be the start of a potential new rise to all-time highs, meaning that this correction that I proposed was a correction, or still is, has ended here in October. So you probably noticed during the previous, let me just get rid of that, sessions, when price started moving higher here, that I mentioned that we potentially had, if this is corrective in nature, either a WXY, a double zigzag pattern, and then we had this strong drop to the downside. That was after that 75 basis points rate hike again. Found support right at that center-median line, where price previously found support here back in, when was this? June. Now, we also said, or I say, should I say, can't really blame this on anyone else, but in any case, that this could also have been a five-wave leading diagonal. What am I talking about? Sorry, I'm mixing my words here today. Meaning that a five-wave move could also signify that we potentially had an A here, that this was just a B, and now we're getting a partner leg up that could match that. And then we see a strong move to the downside. And I think I said on Wednesday, the only way we're obviously going to know this is if price were to break again above this little resistance area where price previously found resistance. I need to actually start clearing these charts up a bit, so I'm going to do that right now. Just give me a sec. And that potential resistance would be at this area, lower end 3941, upper end like 3964. Well, price shot straight through that, bam, up to the upside. And I said at that moment there, you can still consider that this move potentially could be corrective in nature. Alright, I think the only real way that we can start knowing if I'm completely wrong about this, which I'll accept obviously, is that if price should break above this lower high and eventually above this lower high that was set in August this year. Pretty far to still go, right? So while we stay below these levels, I am still bearish, still thinking that it is possible that we might see another leg lower to complete a much larger corrective wave structure. During all these previous bounces to the upside, they moved very fast, very strong inclines, and then all of a sudden failed and moved lower again. So you know, it's not off the table that might not happen again. It's definitely a possibility. But obviously, we're also watching these levels to make sure, you know, where is the nearest support and resistance areas using the market geometry levels. That's been functioning very well for quite some time. So if price were to return to the center median line of this green pitchfork that's been sloping downward, tracking what I proposed is a correction that's incomplete, or, you know, like I said, might have completed, we could then potentially expect price to reach that center median line, which is above today's price range, about 4,077, give or take, where next resistance might step in, like it has previously, like in these instances over here, and here, and potentially again. So a break above this level with some decent momentum, then we really got to start questioning whether a correction's over or not, i.e. that the entire correction could still move lower, right? To the downside, I'm going to get rid of this now too. Quite often you see market geometry, what we call price zooms through an area of market geometry. Like for example, in this instance, found resistance, breaks through it, and, you know, pretty simple trading terms, previous resistance in this case turning back into support. But this time obviously talking about angular resistance and support. So if price should, let's say today, pull back, or Monday or next week or whatever, could potentially just pull back to this 50% dash median line here, where support might step in, 3,937 and a 3/4. And obviously then we also have close to these previous highs over here. So this might all act as potential support. We just color that green. So obviously over the near term, expecting higher prices. Price should move lower here and starts failing and breaking down. Only then would I say I think we've done with the correction. But if we're going to get a partner leg that's as high as this one here, assuming that this is corrective, I mean this bounce to the upside, it could extend quite high, right into this median line over here that I mentioned, 4,076 3/4. And obviously, because these angles are sloping downwards, as time progresses, we'll have to adjust during our next sessions these levels. So things are looking positive. Obviously, market like that. Inflation seems to be cooling down. But like I said, just remind you that this could potentially just be some sort of bull trap, right? Everyone gets excited, things shoot back to the upside, and immediately gets, I don't know, some sort of event happens, and we see a strong reversal down to the downside again. So those are the levels to watch. I do think, like I said, get a pullback in here, probably a good area to potentially anticipate support to step in, with a potential another move much higher. Well, not much higher, at least towards the 4,076 level. Right, that is the ES. Guys, I'm going to go a bit quicker through today's markets. I do have to attend a school function. One of my boys actually in a choir, so I have to go and check that out. And it's, you know, with the daylight saving things, it's actually, I'm starting these sessions an hour a little bit later than normal. Right, NQ, same thing, bam, straight to the upside. We've had its reaction from this lower zone, bottom end 10,758 and 10,942. We've had the zone on our charts prior to price reaching their support once, and I must say it was around about, when was this? Earlier this month, that it looked like the NQ was going to punch through these lows that were set in on the 13th of October. That didn't happen, find support there yet again, and moved higher. Subsequently, currently, and the NQ is always lagging in my chart, so please bear with me. We had this resistance zone around about 11,505 to the upper side 11,662. I probably have to update it a little bit higher because prices now moved into a long-term median line, which is it's testing from the bottom side. And hopefully this doesn't lag too much now. Again, you see how jaggedy my cursor is over there. Anyway, I'm trying to get it as close as possible. So NQ actually at resistance at the moment. See if I can draw this now nicely. Let's just leave it there. Yeah. All right. So on the NQ, way more resistance to the upside than on the years compared to the years. So the NQ really needs to break above these areas where it's currently at. You know, it's already finding a little bit of resistance at that purple median line where it's at right now. If it were to move higher today or tomorrow, not tomorrow, the markets are not open, what I'm talking about, Monday, then we could see another pop up to 11,900, let's call it 11,930, round about there. Okay, so again, NQ been way weaker than the ES, even in spite of pretty bad earnings reports that came out from tech giants. It didn't really help the NQ too much, but in the end they all follow each other in direction, the main indices in the US. So those are the level. If we get a break above the 11,700-ish sort of area, we get a close above that either today, we might even see a pop up to, like I said, 11,930-ish, or potentially next week. Otherwise, price fails and moves lower again, then support would then be at this pitchfork's lower median line that we've also been using on the NQ to track this downwards move that we've been seeing. All right, around about 11,300, 11,400. All right, let's quickly look at crude oil. Guys, as always, if you've got any questions, let me know there in the chat box, and I'll be more than happy to answer that for you. All right. Crude oil. Bigger picture view, I had these channels on my charts for quite a long period of time, more than a year. And crude oil has been bouncing around them and respecting them pretty well. We had this 5-wave sequence to the downside into an area of confluence where we had two different angled market geometry lines, one sloping downwards and obviously those channel lines sloping upwards. After 5-wave sequence, price moved into that area and we've seen a strong bounce. It pulled straight back into the center channel line, which is this dashed line moving to the upside, and came and moved lower. We had this little area of support, which is this green box here. I should get rid of this now. Where we had a potential area for support and beautifully moved in there, and price moved back up. It was also a 61.8 Fib retracement level. Then I used this pitchfork slope to the upside, where it said that the price would need to break above the center line. It tested it once, twice. Last week broke above it. And we're thinking that crude oil will make it into the 94 region to at least the 97.56 region, potentially reaching this upper median line here. It didn't do that. Price broke back to the downside, and it found, and I think when was this? On Wednesday, when we had last session, that we're potentially going to see support stepping in here, and that was basically determined by, or the zone was determined, should I say, by just this up or this low median line sloping upwards, and where we have this low dash 50% dash median line, or where they crossed each other, is where price on the day yesterday found support and crude oil started moving higher again. Now this begs the question, was this an A? And now we're still saying for quite a while now that after 5-wave sequence I was expecting a corrective move to retrace a decent part of this decline. this might have been it, guys. And I think the only way we're going to really know if this was actually it, the end of a corrective move, and that we can see a pretty strong decline in crude, is if prices were to break yesterday's lows. And that's just a very simple way of looking at things. But I think if we do get a break from yesterday's lows around, what, 84.67, what was it exactly? 84.70. So let me just get my snap mode back on here. 84.70. Then I think that will bring in range these previous lows that was set on the 18th of October. And if they get broken, that's also very close to this channel line that's been holding or acted as support previously here in September. If these first warning for strong decline, if this one breaks over here at 81.36, then I think we can see a very strong downward move in crude oil. The big question now is obviously just, was this the end of a correction? It was very zigzaggy moving up. It kind of looked like a potential ending diagonal sort of look to it. Although it looks more like a channel, right? So yeah, the big question, and it just these highs on the 7th just pipped these highs on the 10th of October, and we've seen a strong reversal to the downside. So, you know, to the upside again, price might reach the center median line again at 91.84 currently. Let's call it 91.84 to 92. That's resistance. And like I said, yeah, I'm a bit in between, you know, thoughts of what is happening here in crude oil. Was this really a high? Simply just like doubting that it is or was, because price didn't reach that upper area there where we actually had stronger confluence of three different market geometry lines all meet each other. The thing is, if price were to move higher and break these highs, then all of a sudden the structure is starting to change. Meaning that if it is still corrective, then that it's potentially an ABCX, ABC, and that crude will then gradually move higher, but just take its time over a much longer period of time. So let's keep an eye on these levels. Let's touch base again on Monday, see what happened after today's trading session, and potentially where crude might be moving next over the next couple of weeks. Gold, on the other hand, also experienced obviously a nice strong bounce. Dollar index has been moving strongly lower, obviously because of a bit of a relief in the actual inflation data, right? So here also I'm actually sighing, because I've been saying for a while that gold's pattern potentially looked to me like an expanded flat. We have a three-wave or three-wave combo for an A, a three-wave or three-wave combo for a B, and then a five-wave decline for a C. We already thought back here, when was this? 1, 2, 3, 4, we had this beautiful five-wave move down here into the end of July, the week ending 22nd July, because we're looking at weekly data here. And also say that was potentially a little bit of a short for a C wave, for my liking. I can't move this for some reason, don't know why. I have to take the snap mode off again. But that at a minimum could have been an end of a low. Price moved higher, it failed, it moved lower again. And then thought that the only way that this was the final move low in the C wave, i.e. 1, 2, 3, 4, was that this was the ending diagonal. 1, 2, 3, 4, and a 5. Now, the price also pulled into and tested the 61 FIB retracement level 3 times, measured from this low prior to the strong move to the upside. This was week ending 17th of August. To this high, week ending 14th of August, and obviously this was in 2020, and I took this low from 2018. So look how it's pumping at the moment. It's going really back strong up to the upside. Let me just quickly slow or show you what I'm seeing on at the daily here on back background. We've been tracking this potential ending diagonal look, assuming or thought that price would move lower. That didn't happen. So I'd say the first sort of warning that potentially ending diagonal has ended was with price break above this upper downward sloping channel here, which is basically just the shape or the upper shape of my proposed ending diagonal. That happened. A break above previous chart structure, market structure. Above these highs, it was set on the 4th of October. Second warning sign. Now, the one that would really make me think that we have bottomed potentially for this year or potentially over the long term for gold is if price were to break above these highs on the 10th. It was set on the 10th of August this year. Alright, so yeah. Obviously, this inflation numbers, gold liked it. Obviously, dollar index moving low after that's been skyrocketing for an extreme long period of time, and gold's pumping to the upside. So I'm going to get rid of these lines here now. To clean up this chart a little bit. And hide that, and then I'll quickly just draw back in this pitchfork that I had sloping to the upside here, using the three most prominent anchor points prior to the strong move to the upside. Then resistance, if gold were to move higher, potentially around about here. $1,787 to about 1,800. Very strong move right up, straight up. It's like very little to no pullbacks on this way up to the upside on a daily. So could potentially be that this was the end of it, guys. We'll just have to wait and see. Wrong tool. So I might see a move into there and a move potentially back to where we previously had a high. It could now act as support and then see another move back up again, unless things just fails here. But for the moment, so all I really want to say is it looks very bullish, right? Yeah. So I think there's a good chance that price can make it into that area over there. Should price move lower, then look at support at where this previous lower high was set, around about 1,738. Alright guys, oh yeah, just quickly, let's quickly have a look at the dollar index, and then I have to make a move on the dollar index on the weekly. We've had this very strong move, obviously, that we all should know about, but price moved into an upper channel line, which was in the zone that we identified prior to price reaching that. We had a strong move back to the downside, and then sort of like moved a little bit sideways in the range, and then subsequently moved strongly lower. I don't have updated or live data, or I only have end of day data for the dollar index, so it might be sitting lower than this current level over here, but we did say that should price move lower, it's probably going to reach the 106.54 to 107.53 sort of area, where it's currently just moved into. Like I said, I don't have live data. I'll have to see what it looks like on a different chart where I do have live data. Perhaps, like I said, we might be lying lower than this, but like I said, if we're still within this area, I see this as a very strong area as potential support. Right guys, that concludes today's session. Unless you guys got any questions, then I have to end things here and get a move on. If you don't have any questions, then all good. I'll be back again on Monday. Again, all sessions are obviously stream live on YouTube as well, but recording will be available afterwards on our Ninjacators YouTube channel. If you ever miss one of these live sessions, you want to go catch up on it, then it's always available there directly after, or let's say about 5 minutes after a session has ended. Right, cool. Doesn't look like there's any questions coming in. Guys, have a fantastic rest of your day. Fantastic weekend, and I'll check you all back again on Monday. Until next time, take care and goodbye.